you are likely overpaying for health insurance by $4,200 every single year, according to a 2025 Nomad Insurance Cost Index, simply because you are following expat advice instead of Nomad math. Most remote earners making over $50,000 default to premium global plans that cost $500 a month. But in 2026, there is a base and buffer strategy that gives you better coverage for a fraction of the price. In the next 8 minutes, I'll show you exactly how to build it. The biggest mistake nomads make is buying a one-size-fits-all global policy from companies like Cigna or Bupa. These plans are designed for corporate executives with fixed addresses, not agile digital nomads. In 2025, the average premium for a high-tier global plan sat around $6,000 annually. The problem? You are paying for a network of expensive US-style hospitals in countries where high-quality private care is already affordable out of pocket. In places like Costa Rica or Panama, many retired couples and nomads report living well, including full health care, on $2,000 a month total. By paying for a global premium, you are essentially prepaying for a lifestyle you aren't even using in every country. In 2026, the goal is to decouple catastrophic coverage from routine care. The loophole is the base and buffer strategy. First, you get a Nomad-specific travel insurance for catastrophic emergencies. As of May 2026, these plans generally cost around $45 a month, or $540 a year. This covers you if you get hit by a bus in Bali, but it is not for your annual checkup. Second, you buy local private insurance in your hub country. In Mexico, a top-tier private plan for a 35-year-old can cost as little as $100 a month. Your total annual cost for both? $1,740. Compare that to the $6,000 global plan. You have just saved $4,260 while maintaining access to world-class facilities in Medellin or Mexico City. If this is already saving you money on paper, hit like. It helps more nomads find this channel. This strategy just became even more powerful due to a major legal shift in early 2026. On February 26, 2026, the Supreme Court killed Spain's 6-month rule. Previously, temporary residents were forced to stay in Spain for 183 days to keep their residency, which often locked them into expensive, local-only insurance requirements. Now you have the freedom to travel without losing your status. This means you can maintain a European residency as your safety net, but spend your healthcare dollars in lower-cost, high-quality markets like Thailand or Malaysia. You are no longer tethered to one high-cost medical system, just to keep your visa active. But while Europe is opening its doors, your US safety net is quietly disappearing. If you hold US citizenship, travel insurance alone won't cover you during home visits. But the 2026 Foreign Earned Income Exclusion Rule gives you a legal exit. Under the 2026 FEIE rules, if you qualify by being outside the US for 330 days, you are often not required to hold US-compliant health insurance at all. This allows you to skip the $400 monthly US premiums entirely and redirect that budget into the Nomad stack. The Foreign Earned Income Exclusion essentially rewards you for committing to the Nomad lifestyle, not just working remotely from a beach for a few weeks a year. Once you lose the obligation to maintain US-compliant coverage, your entire insurance budget restructures in your favor. So here is exactly where to move those freed-up health dollars instead. Where should you set up your health hub for 2027? Look at countries with high medical tourism scores. Colombia, Mexico, Thailand. 3 markets dominating nomad health arbitrage right now, and for very different reasons. Colombia is a top contender, specifically Medellin, for everything from dental work to major surgery. Mexico remains the gold standard for North American nomads due to proximity and the sheer number of English-speaking specialists. Thailand, with its new residence permits, offers world-class private hospitals like Bumrungrad, where a full executive checkup costs less than a single ER visit in the US. By strategically choosing your hub country, you are getting better care than you would at home, while saving enough to fund a private health reserve account for catastrophic emergencies. The kind of financial cushion that lets you walk into any clinic, anywhere in the world, and pay cash without flinching. Now you have the blueprint to save $4,200 on insurance while upgrading your care. But saving on insurance is only half the battle if you're still losing 30% to the tax man. Next, I am breaking down the 3 offshore LLC structures that cost under $500 to set up in 2026. Wyoming versus Panama. 2 structures, 1 clear winner. Subscribe now and that breakdown drops Thursday.